So I'm talking with Jerry Byers, and who happens to be down in St. Petersburg, just down the road from me. So how cool is that? Are you native to there by chance?
No, actually not. I grew up in San Diego.
Okay, oh, nice, nice. One
Other
paradise,
side, other coast. Yeah.
one
Other side
paradise
of
to the
the,
other. So you
yeah.
called me up, and you're getting ready to write an article about reaching out to people that did HELOCs about 5 years ago that they're getting ready to reset and like where's the opportunity for the loan officer and how can we benefit the borrower all in the same time by converting these HELOCs that are like a second mortgage and
Exactly.
refinance it into one loan. By the way, so dude, I just saw this report, shocked me. Said that the um, I think it was for last month or was it the month before that it was 55% purchase loans, 40% refinance, and 5% HELOCs. That was a breakdown last month. I was shocked by how many refinances that was.
Yeah, that kind of shocks me too, especially at these rates.
I I I know. So you know what that told me, Jerry? That
Mhm.
told me I'm not marketing. I think I'm marketing my database pretty good, but I think we were at uh, gosh, what was it? I think it was, and it might be off here a little bit. If I remember right, like it was 21 or 22% refinance, which I thought was, I always shoot
Yeah.
for that 70/30. That's kind of the holy grail for me. And, but yeah, I saw this 60, like 60 or 55/45, pretty shocking. So, all right. So, what we're going to talk about is where's the opportunity for the loan officer and how can we help our clients? And oh, by the way, get a commission check when we help them out.
Oh, absolutely. And so that's what we're always looking for, ways to help our brokers and MLOs just find a target that might not be addressed currently, that might be upcoming. And this is, this is pretty common with brokers in general. They're always looking for, okay, where can I grab a piece of the pie? And so we thought about it, and this is what we see as a real win-win because you're going to have a need, and you need to have some people who are prepared and well versed in how to convert those people who are in those HELOCs into the best possible lending opportunity that you can
Yeah.
provide for them. And I think that there's a lot of, there's a lot of possibilities out there. I don't know exactly which ones would fit, every individual, but the point is that, those people are definitely a target right now for, something that I think
But you know
most
what, you know what's,
our
you know what's
guys
funny
can
in that,
do.
Joe Jerry? You're right. They are uh, uh, in need of our help, but the problem is they don't know it.
Exactly.
That's the problem, and so it's our responsibility. Like that's like when I saw that report that said 55 purchase, 40% refi. What that told me was I'm not reaching out to my database and giving the message of other ways that I can help them. So we did a little bit of research and we found 29 different reasons why people refinance. There's 29 different reasons. That's for another episode. Yeah, that's for another
Yeah.
episode. But
Wow.
one of them was,
Mhm.
for these HELOCs, putting them
Right.
under one. So, I think what the consumer doesn't know, and HELOCs come all shapes and sizes, but on the ones that you're talking about, which I think is very common, is HELOCs shift from an interest only to amortizing payment, oftentimes after 5 years. And what that means is their payment's getting ready to make a significant jump, and they don't know it. And they might have got this HELOCs back, and it was like literally 2%. And what they don't know is, oh, by the way, that might be 7 or 8% or 6% or 9% or whatever the rate is,
A hundred
significantly
percent, and
higher.
that's my point right there. Is that it's not just about the interest only portion. It's about the fact that the interest rate itself is going to jump, and so we're seeing an exponential. I've seen a couple prognoses on how this could affect some people in Southern Florida and in Southern California both, and we're talking sell your home because you don't have an option because
Yeah.
there's no way that you're going to be able to afford to
Yeah.
keep up with it. So yeah, now the big question, and you're a real expert in this area, is how do we go about finding those individuals? How do
Okay.
we,
All right. Perfect. So we're wanting to contact them because they may not be aware of the upcoming payment shock, right?
yeah,
And again, this is the creates a natural need for awesome people, Jerry, like you and I and our listeners here, to be a proactive mortgage advisor where we step in. So I think there's a couple things that I think we can look at here. So number one, we can refinance them into a fixed rate mortgage, right? To locked in, a predictable payment. People like safety, people like comfort. So we can lock them in so it's predictable. It's into one product. And also, we can help them see if there's other opportunities, not just to help them with their payment shock that they might be getting ready to see, but that it's like, well, what like a lot of these people, they're like one thing that we found the other day is that a fair amount of them are paying mortgage insurance, and because of the increase in equity that we've seen here in the last 2, 3 years,
they don't need to be.
they can save hundreds and hundreds of dollars a month. And,
Yep.
and Jerry, they don't know it. They don't know. They don't know that they can get rid of PMI. Hell, I bet 80% of them don't even know that they're paying. I mean, not that of course we told them at closing, hey, this is your PMI, but they forgot that, right? Because they're just living
Right.
life and they got their job, and their 2.3 kids are running around the house, and the dog's got a limping with a thorn in
And
his
they're not
leg.
sitting there watching the bar get a little bit closer to 80%.
That's
Okay. I
exactly
mean,
right.
exactly. You're busy living your life.
That's exactly right. So they don't know these things, or maybe they don't know that, hey, there we can do a cash out and put the HELOC into one mortgage and maybe pull out some extra money for an investment or for that pay for that wedding that's coming up, or any number of reasons. So who do we target is the question. And so the first people I would target is I'd go look in my own database, and you go, well, wait a minute, Carl. I didn't do, some people that might be listening to this, hey, I didn't do any HELOCs. Well, I may or may not have either, but it doesn't mean they didn't do one. Maybe they did one with Bank of, awesome institution. Some of the loan officers listening to this work there, Bank of America. So maybe they did a HELOC with Bank of America, and they didn't call Carl and hey, Carl, I'm gonna do a HELOC. Are you okay with that? Of course they didn't call
Right.
me, right? So first thing I would do is I would call my entire database from A to Z. I would do a check-in call with them, and one of the things that I would ask them is, have they done any other financing on their home since we last spoke, to find out, maybe because I wasn't keeping up with them. I recommend people call their past database 4 times a year, and it'll help prevent these things from happening that we're not made aware of. So we have an opportunity to help the client out with that decision, and be part of the solution if one needs to be. But first thing I would do is I just call my own database. Right, that's the first
Yeah.
place that I would start. The other thing I could do is I could pull a list of clients who opened HELOCs, and I would target them like 4 to say 5 years ago, and that's public record. So we can go to public record data and identify those people. I'd start with my own past database first before reaching out to people that's never heard of me, and so that's the
Right.
first thing that I would do. And as far as like the message I would send to them, my message would be, hey, your HELOC it might be getting ready to get a lot more expensive. Let's review your options now while you still have them, or maybe like, you don't have to wait for a surprise in your monthly payment. Let's take a look at it at now, because one thing I found is people love to eliminate uncertainty. I know I do.
Oh yeah, absolutely.
And so
That's a
if
great
we, if,
point.
yeah, and so if we let them know that, hey, you have an uncertainty here, we need to do a little homework and make sure that you're okay. I think that's my primary message that I'm looking to do. And then I think, going forward is, I recommend calling our past database 4 times a year, which equates to 2 letters of the alphabet each week. And so, in other words, if I call the A's and the B's this
Yeah.
week, the C's and the D's next week, because there's 26 letters in the alphabet and 52 weeks in the year, when we call 2 letters of the alphabet, it comes to 4 times a year. And I know in my branch, we close hundreds of loans each month. And one of those ways is through reaching out to our past database. So as a general rule, we close about one loan per 100 people in our past database per month. In other words, if I have, say, 300 people in my past database, I would expect to be having three loans from that past database each and every month. And the other thing to keep in mind is a lot of our closing from our past database isn't them, it's their friends, family, and coworkers, because that's part of our script is asking their friends and family, ask if we can count on them to give us a call anytime a friend, family, or coworker
Right.
is looking to buy, sell, or refinance. I call that my three by three. Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free, cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next. And that when we do that, when we're calling our past database 4 times a year, that, again, we close about one per 100 per month in our past database. Some of those are purchases, some of those are refis. So,
Well, and I
oh,
think that the topic gives you an entry. I mean, hey, listen, this is an issue coming up, and I just wanted to check in with you because, we've known you for a long time. And just to make sure, if you've gotten into one of these, it might be something you want to take a look at. It doesn't cost you any money to take a
yeah,
look at it and see if, there's something that's going to better prepare you going forward. And like I said, it's an easy icebreaker, and you're already talking to somebody you have a relationship with, and if nothing else, they know you're looking out for them.
yeah.
And I
Which
think
I
that says a lot.
which I think is a great message to give them. Say, hey, when we closed, I told you that I got your back, and so that's what we're doing here today. Is
Yeah.
I'm checking out, I'm checking your back. Well, I'm not. I'm checking your
Yeah.
backside out. I wouldn't
Right.
I wouldn't say that, but I
Yeah.
got your
So you're
back.
not like picking. Yeah.
Yeah, yeah. So I think, I mean, that's where I would start with just my own past database, and the other thing, we could create an email and a postcard, something like your 5-year HELOC checkup, or what to know before your HELOC resets, or before you have that surprise increase in your payment. Less chat. And again, I wouldn't just call the people that I did a HELOC on. I'd call everybody because they may have done it through their local bank again, like we said in the beginning. So
Right. Yeah. They don't call you to let you know.
no, no, no. I mean, sometimes they do. Sometimes if we're doing our job right, I mean, oftentimes they do because we're calling them 4 times a year. But
Right.
hey, if we in the past we hadn't started doing that yet, and because we didn't know, right? Not our fault. Nobody told us to. Um, Good time to start, right? Good time
Yeah.
to start. So yeah, I'm not as far as like reaching out consumer direct of people that don't know me. Um, that's really an expensive endeavor. I was just having a talk with a good friend of mine, Hakeem, literally just yesterday about this, talking about consumer direct. And, the problem with consumer direct is we have to be running ads. And then when we close that one, that's kind of the end of it. I mean, we get referrals to that
Right.
person going forward, but it's just expensive running the ad, like Google ads, somewhat expensive.
Right.
Social media leads, they convert between 0.5 and like 2%. So they're not really highly converting. They kind of clog up the system a little bit,
Right.
for,
And if excuse me, if you're doing that, you're already doing it. And this isn't really targeted to this towards, a really focused group like we're really doing here. I have to tell you what one guy told me, and
I mean,
this is an broker up in Michigan.
okay.
And he said, here's what we're doing. He's like, I have good relationships with all my realtors, and I'm just going to them and saying, hey, listen, you've been selling homes for the last 15 years. If you know somebody with a HELOC, um, make sure you're reminding them of that and send them our way because I got some really good options for you.
I like
And
that.
and again, this guy has really good relationships with his realtors. They don't
Yeah.
work with him exclusively, of course, but because he has those relationships, he's already redone like five of them, and I
Yeah.
just literally mentioned this to him a couple weeks ago when the idea approach came up with from one of my associates, and he mentioned it to me, and which is how I got in touch with you. But I just mentioned to him like, hey, what do you think about this? And he's like, that's a great idea. And first thing he did was called his realtors, and they bring him business all the time. And he just said, hey, you got some folks that we didn't write, but maybe they wrote with somebody else and they did, a HELOC. And so, I mean, I guess there's a lot of different avenues for MLOs and brokers to take
Yeah.
with this, as long as they're being creative. The key, in my opinion, is one, let's get let's get them, the brokers, aware that this is a situation that may occur, and maybe not for all HELOCs because some are 10-year, but a lot of
Yeah.
people did
Yeah.
the 5-year option. But
Mhm.
at least let's get them aware, and then if they're aware, they're going to run with it because
Yeah.
that's what they do. They're killers. They're going to be out there, you know, um, you know, working working their business at like the way they always do. Um,
Hey, I got a question for you.
sure.
So we originally, you and I set up this little chat today, not knowing that we were going to hit the record button.
Right.
So you're doing this to write a blog was the original
Yeah.
idea, and
I'm not an AE. I'm not a mortgage lender. I am the senior content manager for A&D Mortgage.
I got it. Oh, okay, I got it. I got it. I
Yeah,
got
so
it.
I do media.
So where do you plan on like so when you're doing a blog, who's the target audience that this article is going to be going out to?
It's mostly our partners, but also people, brokers and MLOs that don't have a partner or aren't currently partnered with us. And
Okay,
so that's who our target is. And so
I
we'll
like
post
that.
it on our website, and then of course we'll support it with our social media channels as well.
Yeah.
And we'll support it with doing impromptu podcasts with Carl. Um,
Yeah.
so
All right, cool.
yeah.
So I like that. So you do a blog,
Mhm.
which is basically an online magazine, and your target audience is loan officers. Say, hey, here's the cool things that we're doing. Here's how we help our loan officers. And if the loan officers not getting love from wherever they're currently working at now, or they got some kinks in armor that needs to be worked on, the more
Right.
people that know what you do, the better off you are. So I like that. Good,
Right.
good, good approach, Jerry. Good
Yeah,
for you.
it's not well, and it's not a converting thing. And let's be honest with you, blogs are kind of like, well, let's say yours and my generation's media. Nowadays,
Yeah,
everything's moved faster towards
yeah,
more social media or more visual media, at least. And everyone wants to call YouTube social media. It's not really social. It's I
no.
post a video and someone comments on it. But but that being said, we do have, thousands upon thousands of partners that work with us already. And
And when you
as
say partners, you're talking about like loan officers?
yeah, we're talking about loan
Yeah.
officers, loan
Okay.
originators
Yeah,
of any
yeah.
sort. Some of them are brokers and
I get it.
brokerages, and some, but just calling them partners kind of just throws them all into the same thing. And the bottom line is, if I'm Max and Lanu, run A&D, the more success that those partners have, the better that we all do. And so if we see a niche, something like this, that we think is something that we should be paying attention to, that's information we want to share with our partners. And so
Yeah.
those are the people who most often visit our blog. Our blog does not go out there and reach out and grab new customers. Conversion rates for B2B is just, it's just not there. But for the people who are already doing business with us, or this is good information for them,
Yeah.
and that's the way we see it. Now,
Now,
uh,
if somebody, some people on our pod or on our podcast, we also transmit these on YouTube. So if whoever's listening or watching this might have stumbled on it on the YouTube, you might have been confused at first, thinking, "Is this the Chippendales tryout that I ran upon?" But no, this is not. This is not. This is just me and
yeah,
Jerry having talks here. So, well, cool, man. Hey, did we cover the
I
topic?
think
Okay.
so. Yeah, I
I
like
think
I said,
so.
I think I got some great stuff for the article, and I'm just going to go back and review this and add that in. And like I said, I'll send you. or Jen, I'll send you an email and just what the quote's going to be beforehand, and we'll get you quoted in
Brother,
there
as long
probably
as yeah,
probably twice.
anything that's on here, you can quote me.
Okay, cool.
Yeah,
Well,
you know,
it's
yeah.
what we
We,
say,
we
best
didn't, yeah,
practices.
we didn't talk about how we got jacked up on crack this last weekend, and
Right. Yeah.
I find if you lead uh what I'm going to call a boring, it's not boring, but you know what I mean, like a
Yeah.
yeah, I'm not even going to go down that trail though. I'll probably even edit that part out, but yeah,
No, I hear you.
it's nice when you lead a clean life and you don't have to worry about getting something getting print. So one thing for sure, you
Absolutely.
will not find my name on Epstein's list. I'm just going to say that.
Right.
Right?
Well, there you go.
That will never happen. So
Clearly I was of no interest
yeah,
to him either. So,
no.
yeah. So,
Boy,
and that's fine by me.
what a mess that is. Isn't that a mess right now?
Oh, it's just,
That is
uh,
a colossal mess. And I just, from a personal standpoint, man, I would, I hope all those people, I'm a karma guy.
mhm.
And all that's just a tragic situation that happened there of the victims. And, it'd be my hope. And I've done my share of screw ups. Don't get me wrong. Not in that
We all
direction
have,
though. Yeah.
right.
But not in that area. I can tell you that.
Right.
And,
Yeah.
and I
Gotcha.
would, they're, yeah. Well, karma will take care of everything. I'm a firm believer in
Well,
that.
and when we have to believe that, and that's why I tell people too. I'm like, I don't care what side of the aisle you're on or what any of that. So, we have to have some faith that there is some accountability for this at some stage,
Yeah, yeah.
because otherwise we just go insane at the injustice of it.
Oh,
And so,
yeah,
and you can't live your life with that. It's
yeah,
internally toxic for you. See,
yeah.
we've got stuff to do. We have lives to live, and we can't get bogged down with that. But yeah, so I'm with you. I'm like, hey,
I don't know how we went from doing HELOCs to talking
I
about
don't know, man.
Epstein, but
You
it's a
threw us
slip.
under the bus there.
It's a slippery slope there. So, all right, Jerry,
Hey, it was really nice
I'm
meeting you, Carl.
nice meeting you too, brother. And hey, for our listeners, thanks for listening for me all those years, and give a warm welcome to Jerry Byers. And hey, and take action to this stuff. Reach out to your past database and find out about the how you can help them with the HELOCs that'll be coming due. If you need help with that script, you can reach out to the team. How do they do that? I think it's getmoreloans.com. I think it is getmoreloans.com. So thanks a lot, and we'll see you on the next episode.
All right. Thanks.